Hey all, welcome to ShareTreck. Today is the 17th of May 2022. It's a beautiful day and the markets look great, pre-market of course. I hope the positive trend persists because the background factors are all not that great to look at. With that said, let's get started with our daily update. So here are my headlines for you today. I've curated some of them and put them together. And we have some CRISPR headlines that are good. Researchers find that CRISPR-Cas9 gene editing approach can alter social behavior of animals. And this research comes from Georgia State University scientists who have created a gene-edited hamster using CRISPR-Cas9 technology to eliminate actions of a neurochemical signaling pathway that plays a crucial role in regulating social behaviors in mammals. Now, the end result was not very predictable, but it altered the behavior. So now the scientists are thinking that there are much more complex pathways within. So they are at the tip of the iceberg, understanding how to control behavior through genetic modification. So there might be more neurochemical signaling enzymes working at different levels in different combinations. So that's what they're working towards. And unfortunately, this can also give rise to a lot of conspiracy theories where people can come up saying that government is doing research to alter your brains with CRISPR so that you become more docile and compliant. So that is for a future date, but there's potential for those kind of misinformation also. Having said that, let's look at Ginkgo Bioworks. Ginkgo Bioworks with the ticker symbol DNA has posted disappointing EPS results, but it has surprised on the revenue, as a result of which the stock price is up pre-market. So what they did was they reported 59% above expected revenue, and they came in at 168 million against an estimate of 105.7 million in revenues. When it comes to EPS, they reported a negative 37 cents EPS as against the expectation of negative 14 cents EPS. So that's quite a bad performance on the EPS side. I need to dig down a little bit more into this stock. Probably the EPS is down because of share dilution. So I need to look at that. I'll do a separate segment on Ginkgo later on. I can't promise when, but I'm going to do it as soon as possible. And maybe even on the weekdays, I will drop that video. So with that said, the Russia-Ukraine crisis is still continuing. There is no sign of any let-up out there. Potential delays in lifting China lockdowns, because I saw a clip on CNBC from the Far East where I think it was CNBC. So there was an interview with the local manager out there, and they were saying that the lockdowns are there between the state borders. So the approvals for moving a truck with a container from one state border to another is valid only for 24 hours. And all these logistical issues and the time taken to get the permit, all those things are making it very difficult to move goods across and bring it to the port. And the shipping data indicate that very low exports have taken place recently. And those low exports could mean that there's going to be a shortage of those commodities or manufactured materials in other parts of the world, including the United States and Canada. So we are looking at another bout of inflation feeding data. So it could potentially bring the market down again. So even though the markets are higher today and the futures is also showing a lot of green, I think this momentum is not guaranteed to last, because as soon as we start feeling the impact of the lower shipments from China in April, we are going to have inflation go up further, and that's going to dampen the spirits. So that's all I have for headlines today. And I would like to show you the fear and loathing index, as I call it. This is a CNN index. I had given you the link to it in one of my previous videos. I found this to be an interesting go-to video, because when you look at the futures and when you look at VIX and whatever you see in the morning for the market, you tend to forget the overall underlying problems. I try to keep on reminding everyone that none of the risks that we have spoken about since the last 2 months has been resolved. and they still percolate in the background with new ones likely to get added. So this fear and greed index is a very good reminder. It shows that the market is still at extreme fear. What happens when a market is at extreme fear is that people do knee-jerk reactions, and that leads to violent swings in the market, which sends the VIX up. So that's the environment in which we are. So any greens that you see, always exercise your judgment and caution before acting on anything in the market at this point of time. Gains may be transitory. And as I mentioned, we have to start looking for signs that we have got a range-bound movement, which will indicate that we are close to the bottom, but we are not off the risks yet, and therefore we are range-bound moving sideways. If we get that signal, then we can start swing trading because we can time the purchase at the lower part of the sideways movement and sell closer to the higher part of the sideways movement. We'll talk about that in subsequent sections of daily updates, and whenever I see those opportunities, I will start highlighting them, and you can decide to investigate it and decide whether it's something that you want to do. So with that said, let's go and have a look at Nasdaq and the rest of the indices. I'd like to start off with this particular chart, which shows all the indices that we have and contrast it against the VIX. This line out here, this squiggly line, violet line, indicates the VIX, as you can see on the side here. It's up 41.57%. And you can see that the higher highs of the VIX stopped somewhere around 7th of March 2022. And since then, it seems to be forming a kind of lower highs, which is a bearish channel, and this is good news. What we need to see is that this trend continuing further and us having more lower highs as we glide back to normal conditions. The normal conditions were out here, June 2021 and somewhere right up to September 2021. Well, we had some normal conditions and our market was quite high. Now it's the reverse, and the markets have dropped down significantly. And at the very bottom is the IWM, which is the Russell 2000 index, and you can also see that Nasdaq has also lost quite a bit. It's the biggest loser happens to be the Russell, followed by Nasdaq, and you got the Dow Jones Industrial Average, which has lost very less, and at the very top is S&P 500, which hasn't lost as much. We are still waiting to see S&P 500 get into the bear market territory, which would kind of give us a signal that we are likely to get back and move upward again, that the bottom has been reached. So we are still waiting for those signals. And as you can see, the VIX is going to be the biggest indicators for us because it's the most exaggerated indicator. You can see it moving very violently across the chart. And therefore, any amount of VIX coming down is going to mean that all these indices are also going to pick up. That's how I look at this chart. Now let's go and look at the actual index itself. Here I would start with the futures. The futures are pointing positive 1.91%. That's around 233.5 basis points, nothing to sneeze at. And the market is this is pre-market. This is 9 o'clock in the morning. This is really a good indicator for us that the market is looking bullish today. Let's go and look at the other indicators. I'm going to start off with oil. Oil has continued to remain high. And this is something that's bothering me a lot because China is right now not consuming as much oil as it would have otherwise. And somewhere around the second week of June, I'm expecting China to come back into the market for oil. And at that point of time, the oil prices are going to spike up. So if we are already at an elevated level right now, and we are out of this bullish pennant and there is no sign of us going down, I would be very worried that when China comes back into production, this could go up, because oil going up leads us towards a stagflationary outcome when the Fed is trying to do everything possible to destroy demand, because the demand that cannot be destroyed is the demand of things that are very, very essential for life. Demand for things like salt, and now demand for oil, because oil is needed to move produce from the field to the factory to the superstore. Oil is needed to move someone from their home to office. Oil is well embedded into everything, right from manufacturing to distribution to everything, and the electricity that we consume. Everything has got an element of oil in it, and therefore, if oil prices stay stubbornly high while the Fed continues demand destruction and people have less and less money in hand, and they still have to buy these necessities which are going to still stay highly priced, then we are into a stagflationary environment. So as US oil demonstrates these kind of stubborn upward tendencies in price, I'm more and more worried that the Fed is going to fail in its attempt to do a soft landing, and instead of a recession, we are going to end up having a stagflation. So I'm going to watch the oil much more closely. If any of you have any theories, please put that in the comment below so that we can exchange some ideas. Having said that, I'm going to look at the put call ratio, and the candle that we have here is for 16th of May. So yesterday we ended at 0.94, slightly better than where we were the day before, but still we have a long way to go below, because I think this is more or less a balanced kind of PCC. I want to see more calls in place so that we can see a bullish market out here, and that has not yet happened. However, the good thing is that we are away from those peaks of max pain at 1.37 and 1.31 respectively. Now let's go and look at the live wicks. Today's live wicks is this candle for 17th of May, and it is below our support of 27.20. So I'm going to be happily marking this support as a resistance. We are also having resistance from the 50-day exponential moving average, which sits at 27.10. Super happy about it. Now we have three exponential moving averages on the top. The only one at the bottom giving resistance is the 100-day exponential moving average at 25.48. Our next support is at 25.48, which is the 100-day exponential moving average, and after that it is 24.28, which is this horizontal support that we have edged out here. And if you look at the MACD, it is bearish, moving down. And if you look at the momentum, it's also pointed downwards. I'm happy with the VIX the way it is right now. It signs good things ahead, at least momentarily for this day. And then if we go to the US dollar index, I'm very happy to see here that the US dollar index has dropped, and it still has a support at 12,720, but it has dropped from last week, and it has even dropped from Monday. And we have the 9-day exponential moving average now performing resistance, and the 20-day exponential moving average as the next resistance after the horizontal resistance at 12,720. I would have liked it to fall faster, but it's not practical. It's wishful thinking. I'm happy with the way it's going right now. It was in overbought conditions, but now it has fallen down. So the risk now is that it has got potential to move up again. However, the MACD has crossed over the signal line and gone down. If this trend continues, the money that is being taken out of the US dollar is going to go back into gold and the stocks. We already see in the futures that that's the place where Nasdaq is where the money is going. We'll also check out in gold later on to see if it's attracting any cash. If it's attracting cash, gold should be going up. We'll check that out later. Now let us look at the 10-year US yields. 10-year US yields have gone up. This is a contrary indicator. I'm not happy about this, but the MACD is bearish. So that gives me some hope, but the momentum is picking up. That's not good. So the first bit of mixed signals I'm getting here. So if you look at the 2-year, again, 2-year has gone above the resistance that we had. So I have to mark this as a support going forward. This again is not a good news, but in a way I look at it as being consolidating out here. So I don't think things are looking too bad on the 2-year front, because we have been in this range for the last 1 week. So it's not going to impact that much. But the 10-year definitely worries me. If I go to look at QQQ and see what is happening, it shows 1.94% increase pre-market. So there's a gain of $5.79 for the QQQ. This is a good sign for Nasdaq. Let us go and look at S&P 500. S&P 500 is up 1.56% pre-market. That's $6.23. And we have a doji candle out here, which just bounced back down from the 9-day exponential moving average, which sits at 403.50. The MACD is turning towards the bullish side. It's still bearish, but turning towards the bullish side. The momentum is not very pleasing out here. It's not encouraging. So that's the only thing that gives me pause. And of course, we have this minor resistance out here. We have to break through these two in order to make any progress with S&P 500. So if I try to draw a measurement scale and see if we are below 20% on S&P 500, I'm going to find that we are not. We are still above 20%. So S&P 500 is still healthy. The most that it had dropped was, let us take this measurement here. The most that it dropped was 19.42%, and it has not gone below that. So we still need to see the bottom of the market come in place. The other way we can verify the bottom of the market is if we start consolidating sideways. We have a week to go before we can find that out. Now let's look at our crypto side and the gold. Now, if I go to gold, I can see a smart move up in gold. It's up 0.25%, that is $4.59, with the 9-day exponential moving average proving a constraint. So now this kind of validates the fact that money has come out of US dollar and it has gone into gold and into Nasdaq. We saw Nasdaq was also positive pre-market. And we can see the MACD is bearish, but tending towards a signal line. MACD is as low as it had been in quite a while, with a little bit more room to go down. So that's a good possibility for us to turn around. Momentum, which was at rock bottom, has picked up sharply today. And hopefully, if it continues that pattern, we can see gold picking up further. And now let us look at Bitcoin and see where Bitcoin is. Bitcoin is still showing bullish signs out here with a support of 28,993, 3 consecutive green candles, actually 4 consecutive green candles. And MACD is still very bearish, moving towards the signal line. Momentum is also weak. So Bitcoin might end up taking cues from Nasdaq and pick up today. Maybe it will fall up later on, but for today, it is likely to pick up based on how Nasdaq moves. With that said, let's go and look at our genomic shares. So guys, here we are with our genomic shares. On the right side of our watch list, you can see all the tickers organized by the biggest gainers. And as I mentioned yesterday, select companies have done better, the rest were in red. But today's trend seems to be that most of these are going to be in green, and some of those which were green yesterday might probably get into a bit of red today just to balance out the gains. So that's how I look at it. I'm going to look at IDNA first. When I look at IDNA, there has been no trade pre-market, and yesterday IDNA bounced off this diagonal support. So it just stopped just right out there on the diagonal support, which is validated by 1, 2, 3, 4, 5, 6, 7, 8 touch points. So there is 8 touch point validating this diagonal line, and we stopped right there. So if we look at the bids and ask, bids are at 28.36, while asks are at 29.02. So given that we ended yesterday at 28.29, the bid being at 28.36, I can see a bit of a bullish bias out there. So it is supported by the futures for Nasdaq. It is supported by the pre-market QQQ. That today is going to be a bit of a bullish day, at least the first part of the day. Whatever happens later on will depend on what kind of news we get from out there, and if there is a speech from anyone in the Federal Reserve, that could also have an influence. So just be careful. We are not yet out of the woods. And in terms of these genomic shares out here, what I would like to definitely say is that I'm going to be working on DNA. I'm going to do a bit of a deep dive to come out with a video this week, somewhere this week, talking about their earnings and their prospects. And please watch out for that. And I also put a video this morning talking about how everything is connected, the Ukraine war and how it's impacting us. So please have a look at it if you haven't done so far. And do not forget to put a like here. And if you're not yet subscribed, please subscribe and become a member of this channel and help us grow this channel. Thanks and have a great day. Bye for now.